Hello and welcome to the corresponding webinar recording outlining the NICE response and changes to the proposals to the charging procedures for the technology appraisals and highly specialised technologies programme that took place in November 2023. I'm Laurie Farrar, Associate Director for Topic Selection and Charging. Throughout this webinar, you will hear and see two voices, that of myself and James Fitton, Senior Management Accountant. For the next set of slides, I'm going to hand over to James, who will take you through the financial context. I will join towards the end, where I will outline again the proposals within the consultation, what we heard, our response, and what will be implemented from the 1st of April. Thank you.
Thanks, Laurie. As Laurie mentioned, I'm James Fitton, Senior Management Accountant here at NICE. I'm also the Finance Lead for the TA and the HST programme. Whilst NICE did not specifically ask for comments on the new fees, we have heard concerns and have provided clarifications in the formal consultation response. Reluctantly, the fee increase will go ahead as outlined in the consultation. That means from the 1st of April 2024, a standard technology appraisal will cost £186,100. The main driver behind this decision is to ensure financial sustainability of the TA and HST programme. The TA and HST fees now make up approximately 15% of NICE's total funding. NICE will still be subsidising a significant amount of the programme in 24-25. NICE decided to absorb costs relating to an increase in employer pension contributions, committee remuneration, and the impact of the fee drag expected in 24-25. In short, the fee drag is the financial impact of spending much of 24-25 working on appraisals charged at 23-24 prices. This makes full cost recovery very difficult in 24-25. NICE also reaffirms its commitment to setting fees in line with managing public money. The fee does not include any costs that are funded via the 2024 voluntary scheme for branded medicines pricing, access and growth. The only costs included are direct costs, which are the direct costs incurred and controlled by the medicines team, indirect costs, so they're the support teams essential for guidance delivery, and also a contribution to overheads, which is a proportion of back office and estates costs allocated to the programme. This slide is a reminder of the financial performance of the TA and HST programme since we began charging back in April 2019. As you can see, NICE have reduced the deficit year on year, but there is still some way to go to hit full cost recovery. As mentioned in the previous slide, we face certain challenges in achieving financial balance. First of all, new fees are calculated several months before coming into effect. This means adverse trends in inflation or changes in the cost base assumptions can have impact on full cost recovery. Second of all, fees are charged at the start of an appraisal. Significant delays or pauses in the appraisal process can mean income recognised is less than the full cost in real terms. And thirdly, we also face unpredictability in the programme. There is unpredictability in terms of volumes, eligibility for a small company discount, and topics converting from a standard TA to another output type, all of which can negatively affect cash flows and income recognition. As was the case in previous years, we followed the guidance in managing public money to set the TA and HST fee. Chapter 6 of managing public money sets out the basic principles that we followed. Those principles include recovering full cost of the programme, so direct costs, indirect costs and overheads. Set the fee to neither profit at the expense of you as customers or make a loss for taxpayers to subsidise. We are required to control costs as if they were funded by the taxpayer, and we rely on legislation from ministers. This slide is a recap of the key changes to costs and expected units to be completed in 24-25. There are several key factors influencing and driving the fee increase. They are a higher than expected NHS pay award granted in 23-24. An assumed 3% pay award was built into the 23-24 prices, which was later converted to be 5%. NICE absorbed the additional 2% in 23-24. The decision to absorb the extra cost was taken due to the timing of the NHS pay award, and it was agreed that it would not be appropriate to increase prices mid-year. At the time, NICE clarified that this increase will be reflected in the fees from 24-25 onwards. A pay award of 4% has been assumed for the 24-25 fees. The provision and delivery of the TA-HST programme in their totality and the requirement to reflect the resources required to develop modular updates and associated changes to methods and processes. This includes the proportionate approach activity, for example, the cost comparisons and pathways pilots. Included in the fees for the first time are the cost for the medicines optimizations team, that is to support cost comparison activity, pathways, and also standard appraisals. Secondly, the science, policy and research team. So this is to support the delivery of modular updates and broader research and methods related to TA-HST activity only. When reviewing the fees, NICE must consider the capacity of the work programme. The projected capacity for 24-25 is 80 units of work, based on a combination of previous year's actuals and forecasted demand in 24-25, considering horizon scanning, availability of committee slots and external assessment group capacity. The expected capacity has been revised to ensure that the capacity in place reflects the level of demand and that the fees are set at a level that allows the programme to recover all its costs. The work programme delivers the 80 units flexibly, comprising several process types. It's important to emphasise that 80 units do not directly correlate to the number of guidance publications per year. I won't go through this slide in too much detail, but the information is there for you to take a look at. The slide explains which teams are included in the charge for a standard technology appraisal and what proportion of the charge is allocated to direct costs, indirect costs and overheads. As you can see, nearly 2/3 of the charge goes towards funding the core medicines team, with the remainder being distributed between indirect costs and overheads.
Thank you, James, and hello again, everyone. So for this section, I'm going to go through the proposals that we consulted on in November 2023, what we heard from you, our response, and the modifications to the proposals that we will be implementing on the 1st of April. So just a reminder of the proposals that we outlined in November 2023 as part of the consultation paper. There was 5 all in all. Proposal 1 was confirming the evaluation timelines and the commitment to pay from industry. This proposal will be going ahead, but with modifications. Proposal 2, the introduction of a change fee. This proposal will also be going ahead, but again with modifications. Proposal 3 was for a charge of technical engagement. We're not going ahead with that proposal, and I'll talk to you a bit more. I'll talk to you about that in a bit more detail shortly. Proposal 4, a charge for pilot topics. This proposal will be going ahead, but again with modifications. And Proposal 5, updates to the refund process. Again, we will be going ahead with this, but with modifications in light of the responses received. Proposal 1, confirming the evaluation timelines and commitment to pay. Within this proposal, we advise that we will be seeking the unique reference number, that's the URN, 19 months ahead of guidance publication. Listed on this slide is 4 themes of what we heard and our response to those comments. So broad theme is that 19 months ahead of guidance publication was too early, that you did welcome the motion to be predictable and more efficient in terms of your scheduling by having that early commitment to pay and scheduling confirmed by the team, that you would like cost recovery aligned to key milestones linked with the stages of the evaluation rather than a one-off upfront payment. And there was disagreement with the use of company-driven changes terminology. So in terms of the 19 months, we have changed the request to 6 months before invitation to participate, and I'll go through that and I'll do some more detail in the next slide. We will continue to drive forward process improvements that support a more predictable work programme. With that, though, comes a partnership with industry that you need to collaborate and communicate with NICE on what your regulatory plans are. There is no change to the current charging schedule in terms of we can't allow bespoke charges because that requires more resource that would have to be funded through the cost recovery mechanism. However, we are committing to reviewing that in 24-25. Just to highlight that we understand that there are many factors which influence timeline changes. So in response to the comments that 19 months ahead of guidance publication was too early, we have now made the timings clearer in that date 0 is now the invitation to participate date, which you can see at the very bottom of the flow chart that's on the screen in front of you. So in terms of that, the URM will now be requested 6 months ahead of the ITP date, as opposed to the 12 months that was listed in the consultation proposal. This is a change of 3 months to what the team currently asks now. So rather than 3 months ahead of the ITP, we will now seek the URM 6 months ahead of the ITP. So if I try and take you through this flowchart from the very top where it's at, I'm pointing at my screen, sorry, topic selection, where we say it's around about 13 months ahead of the invitation to participate date. This is what date 0 is now. That we provide you at that time through the start form, that's the scheduling and regulatory timelines form that we send to you along with the Innovation Observatory briefing note, that we suggest the proposed submission dates provided for consideration at that point. So we take that within line of the regulatory information that you provide us there. Throughout this kind of period here, before we go to the regulatory plans with the company, around about 9 months, we expect the company to continuously update UK PharmaScan with any updated regulatory plans, and also reach out to the NICE team as well through the regulatory updates email address. Moving alongside now, that we will then confirm the timelines and the topics scheduled. And once we have that agreement from you, from the company, we will then request the URM, which is circa 6 months ahead of the invitation to participate date. Now that locks the scheduling timelines in, so therefore we have that commitment that you agree to those timelines and that you agree to pay for the evaluation. And we will seek the URN, and then we will issue the invoice, for which the NICE payment terms of 30 days it applies. Once we receive the URN, scope consultation will begin, which is around about 2 months ahead of the invitation to participate, and then the scope consultation ends at 1 month ahead of the invitation to participate. So that's a very top level diagram of how the processes of topic selection, charging and scheduling all interlink with each other for the charging process. And at the bottom left hand side there on the screen, you can see the key that relates to the blue are the stages of the TA-HST process, charging activity and scheduling activity. So within the consultation and the webinar that took place in November, we showed a summary of topic scheduling changes. So these were taken from April to October at the time, because the webinar was held in November. So just to update stakeholders here, we have added November and December so that you can see the percentages in terms of the amount of changes that happened to the NICE work programme. Within the consultation comments that we received, there was a request for more detail on what it was in the consultation. There was a 23% classed as other. Now, adding the additional data for November and December, the other total has kind of minimised a little to 21%. Now you can see that in April 2023 that there was quite a high volume of changes for 22. Now within that is also a mixture of NICE removing the technical engagement from evaluations that were taking place at that time, as part of that drive to say that, you know, technical engagement isn't working, it's not doing what it needs to do, so we're going to remove it as a standard part of the process. But in addition to that, all of the other changes are the removal of technical engagement step, as I've said there, process changes, for example, that's STAs converting into cost comparisons, any termination of guidances. They could be committee date changes, that's no delay, they've been brought forward, and a very small number, proportion into the TSOP, that's the topic selection oversight panel routine challenges, where there is a routine challenge on a TA versus a HST routine. So I hope that's there to respond to those points of the points in the consultation, and you can see there that the company request and the licensing changes are still a really large part of our scheduling changes, which is what we want to work with companies with to minimise disruption for ourselves and you. In addition to seeking the URN early, there was a link a linked proposal with the introduction of the change fee, which also is linked to the previous slide that I went through with the changes to the work programme. This proposal will be progressing forward, but with amendments, and there is a flowchart on the next slide, which I will go through in terms of when and where a change fee does and doesn't apply, as that was a source of confusion within the consultation responses, that we didn't lay that out very well. So we heard that the change fee combined with an early request for the URN would create a greater risk of a change fee being incurred. So therefore, as a result of that, as previously outlined, we have amended proposal 1 and split the request time by half. So it was 12 months, it's now 6 months ahead of the invitation to participate date. I think what was also confusing was the fact that we linked it all with the guidance publication date. So there was a lot of comments, and I think even internally we got confused with what the months was and what that meant. So a rehash back to taking it back to month 0 being the invitation to participate date. We also heard that it would be unfair to penalise companies for regulatory changes out of their control, and that NICE must be able to operate in an uncertain regulatory environment. So as stated previously, NICE will continue to engage with companies to minimise the impact of regulatory updates on the work programme. That's where we will come to you and ask, and we also have the expectation that UK Pharmasan will be updated and that you will also alert us through the regulatory updates email, or even in your pipeline meetings that you have with Jenna and myself, or any other kind of communications meetings that you have with NICE staff. It was unclear when the change fee would apply and in what specific scenarios it would be enforced. So we've listed here that it will apply if a request to amend the timeline is received 4 calendar months ahead of the invitation to participate date. The flowchart in the next slide will outline that more clearly as well, which I'll go through shortly. And then finally, combined with the increased fees for 24-25, it was felt that this could have a negative impact on budgets forecasting and may push launching the medicine in the UK at risk. And our response is that predictability is important to industry, and instead, therefore, a smaller flat fee of 5%, which is £9,305, will be implemented. In the consultation, it was a flat fee of 10%, which was 18,610. So we have amended that as well. So here is the change fee that will be implemented. So again, there's a key at the bottom with a key of which colours relate to the parts of the process. Charging activity is the ones in green, scheduling activity in the beigey colour, to-pay colour, and the key stages of the TA-HST process. So just to the far left here, we've got the start that's outlined. So we check regulatory plans 9 months ahead of the ITP, and again you'll see some linkages with the flowchart that was shown slide before last. So these will look side by side when you look at them on the NICE website with the written response. So we will confirm timelines and topics scheduled and request the URN 6 months ahead of the ITP. Now if we go to the top half of the flowchart, if there is a request for the timelines changes received more than 4 months ahead of the invitation to participate date that has been agreed, a change fee is not applicable and the topic will be rescheduled. And if we go to the bottom, that if the request for the timeline change is received less than 4 months ahead of the invitation to participate date, then a change fee will apply. The topic will get rescheduled, and once the new timings are confirmed, the invoice will be issued with the new date for the change fee. So if we go back to the middle green part where it says request URN circa 6 months, you will get the URN invoice issued. That's that part of the flowchart is the same as the one that you've seen 2 slides ago. Again, consultation begins, ends, and ITP issued. So it's the top beige and the bottom beige that really kind of outline the change fee parts here, and it is noted that a change fee could apply more than once for any evaluation, depending on when we receive notification of a change required. So proposal 3 was a charge for technical engagement, and as mentioned at the beginning, we will not be progressing or implementing this proposal. What we heard was that NICE may recoup extra costs for a process which, if initiated, should speed up evaluation process. If industry are expected to pay, a company should also be able to request technical engagement, and that the unpredictability of technical engagement creates uncertainty for budget planning, and there could be a negative financial impact on treatments with an uncertain evidence base, such as rare diseases. So in light of this, the proposal has been withdrawn, and that we will continue to monitor the effectiveness of technical engagement and the impact on cost recovery of the work programme. To date, since it was removed in April, we have only initiated 2 evaluations where they have had the technical engagement step included. The approach to technical engagement remains as per the updated interim process and methods guides for the proportionate approach to technology appraisal, where the decision to include technical engagement will be a decision by NICE, and we'll have the conversation with companies at that time. Proposal 4 was a charge for pilot topics and amendments to processes. What we heard was that the consultation document provided minimal information on the proposal and that it lacked justification and detail, and the fees could disincentivize participation and collaboration in pilots from companies. Our response is that it is appropriate to apply divergent fees to accurately reflect the resource and unit capacity utilised by the evaluation. These fees have previously been referred to as exceptional charges within the charging procedures. We also heard the industry assume a level of risk when agreeing to be involved in piloting processes and methods for an evaluation. This should not be reflected in the fee, and the fee should be lower because of this. Piloting and testing innovative approaches will not always cost less. There is no defined process, and additional or less NICE resources may be used. The reason why we're approaching with divergent fees is to allow us the flexibility to be able to amend the standard processes and give the best value to the company in evaluating their medicine, and also to ensure that NICE fully recuperates its costs in line with managing public money. We have done this before, most generally that they have been done for multiple technology appraisals, where the evaluation of the medicines in question haven't quite fitted the MTA standard fee, and they haven't fitted the MTA complex fee. So the reason for the divergent fee has been somewhere in the middle. That is the appropriate cost in terms of cost recovery for the resource effort that has been used, which is why we said in the consultation it would be no less than the lowest fee, being the rapid review cost comparison fee in the charging table, and no higher than the highest fee, which is the MTA complex. We understand that the final statement in the table where we've said this is unhelpful and creates uncertainty for budget planning, but it's very difficult for us to advise what a divergent fee may look like because of the amendments to the processes and what the end evaluation stages and milestones may look like. What we can reassure you is that it will always be based on the standard fees and the key milestone weightings, and we will look at what any amended processes we have approached and have that conversation with the company and say, according to our milestones, and our standard processes, these are the milestones that you'll be hitting, and these are the percentages, and this is what the fee will be, and this is what it won't be. We will always have that early conversation with the company up front, as we have done in the past. So it's not necessarily about pilot topics, it's about amendments to standard processes to allow us the flexibility to be able to do that and ensure that everybody is getting the best value for money. Proposal 5 was an update to the refund procedures, where we was requested more information on what the baseline is for refund calculations, and there was also a theme of comments throughout the consultation about requesting more transparency and granularity in how the fee is proportioned throughout the evaluation. So these key milestone weightings respond to that. So you have got the ITP at the beginning, so that's the invitation to participate. And what I just really wanted to draw out here is that this also includes the pre-ITP resource, such as topic selection, scoping and scheduling. There was a theme of comments that was felt that charging shouldn't really commence until the ITP stage onwards, but the cost recovery for the technology appraisals and highly specialised technologies programme is for every single resource that is attributive to the evaluation, whether that be at the beginning stages, the middle stages or the end stages. So all of those costs need to be recuperated and are through the model. So that weighting is 18%. Then you've got the evidence submission, 7%. The external assessment report deadline, again, is 7%. And then you've got the committee preparation stage 1, so that's the first committee meeting, is 12%. Now, there is more detail in the written response that accompanies this, where we say that once an evaluation hits that committee preparation stage, there is no refund, because at that point we have done all of the preparation to start the evaluation. We've got a commitment from yourselves as the company that committee meeting can go ahead. We have all of our resources allocated to it as well. So there is more detail there. And then you've got the committee meeting 1, which includes all of the post-meeting activities, including the draft guidance, writing up, and then the consultation that comes with that, which is very similar to the preparation stage 2 and the committee meeting 2. And then finally, we have that guidance publication area. So just to note that the key milestones are a baseline for refund calculations. The exact refund owed may differ if additional resources and overheads are utilised. And just to also highlight that the previous notification for a refund, that if a medicine does not receive its marketing authorization, that refund remains applicable, including if it has passed the committee prep stage. So previously our refund procedures only really allowed for a refund if a medicine didn't receive its MA. So we've kind of broadened that out now. So this diagram here just outlines the scenarios where a refund could also would be applicable. So we've spoken earlier on in the slides about that conversion between an STA to a cost comparison. If a medicine goes down the streamlined route, that would also be applicable for a refund. Amendments to processes, so that can also include that also includes those divergent fees that we discussed earlier on. Divergent fees there if the evaluation cannot be completed. So that's in the case that if, for example, if a marketing authorization is not granted, as we've discussed just on the previous slide, and then a timeline change after ITP is issued. So if, for example, an invitation to participate is issued and there is a request to change the timeline within, and it stretches it out by 4 months. So the golden rule is those 4 months that we've spoken about in the previous flowchart. What NICE will do is we will refund up to the key milestone that you've hit, and then we will reissue an invitation to participate for the newly scheduled timelines, and the fee that is appropriate at that time. That time will be applicable. During our review of the consultation responses received, we have decided to implement a new proposal called After Action Review. This means that both NICE and companies can expect to receive a standard and quality of service. To allow us to monitor and address this level of quality, evaluations that have an invitation to participate date from the 1st of April 2024 onwards will be offered an after action review. That this will take place after guidance publication. We will work with industry representatives to provide that two-way communication opportunity at the end of the evaluation. It's important to note here that we do not anticipate that these will be in a meeting format. They are likely to take part in some kind of online digital form to allow both parties to be able to feedback to each other effectively. We will also collate all of this information and build it up in a report and share the feedback with everyone to ensure that we are all receiving that quality of standard and service that we would expect. So in summary, we want to support and have a clear route to standard and structured processes. That means having timelines that are predictable, robust and adhered to. We want to focus on giving predictability and consistency, and we want to minimise disruption to the work programme by providing a more controlled environment for making changes to evaluation timelines. As with a theme throughout here, as I've spoken to you throughout all the proposals and our responses, we really also do expect that commitment from the companies through a commitment to updating UK PharmaScan regularly and at the time of change, communicating through the regulatory updates email addresses, through the pipeline meetings with Jenna and myself, or any other kind of forum that you have with any members of the TA-HST program about updates to your evaluation. We also commit to continuous improvement with modular updates to standard methods and processes, but these are owned by and run by the TA-HST program. We commit to standard and structured framework, which we have in place now, and we have also committed to, rather doing these rather big reviews and big consultations, that we will be taking the modular approach and looking at discrete pieces of the process each time, and then coming up with changes or no changes, and we will communicate those as we look at them, although the implementation period will not be until the next financial business year, which for NICE is the 1st of April in any kind of calendar year. And we hope that way that the early notification of any changes that may come through engagement with yourselves would also help with your own budget and financial planning, which we know that starts at the end of a calendar year. And then just finally, as we've discussed on the slide before, we've got the after action review that we've said there. And I think what we should also mention here is that through our business plan for 24-25, that we are looking to introduce quality improvement methods to continuously improve the process and the timelines of our guidance through simplified, aligned, digitised guidance production. This is an important part of our business plan objectives, as I've just mentioned, to drive further efficiencies. That's for the whole organisation, but particularly for our team that we work in medicine. So it was just to highlight that commitment for our business plan this year to you as well. So I hope that you found this webinar recording helpful in complement to the written consultation response, and I look forward to working with you all in the future as we progress with the charging procedures and processes as we move on. Thank you very much for listening.